Yes, hello everyone. Welcome to this brand new video on my channel. And in this one, we're going to be looking at top-down analysis, but we're going to be looking at it from a different perspective. You look on YouTube and there's many videos on top-down analysis, but not really with the focus on fundamentals, especially. And that's what we're going to be getting into sort of in this video. Now, I'm going to split it up into two parts. Pretty much the first part will be going through an example, especially on the higher time frames, in particular DXY, what's been going on, and then how to actually trade that on the lower time frames with examples as well. Now, before we get into everything, just wanted to say, thank you for all the growth and everything. Even on Instagram, it's been growing quite a lot. And at the same time, my group as well. We've just hit 205 members, I think, just recently. So, it's been going quite a lot. I've just recently updated my website as well. So as you can see, everything is on here. You've got both of the courses, technical and fundamental course with the trading channel included, the technical course and the trading channel, all the descriptions in here just to see what's included, 80 video course going fully in depth into fundamentals and technicals. Literally everything that I've been going through in YouTube is just sort of an insight into what we provide here. But yeah, even in the trading channel, just been really popping off with all the trades. Recently just sent out one of the entries into the group, hit 12R on Friday recently. So yeah, always keeping updated with fundamentals as well every week, going through weekly analysis. But yeah, guys, if you guys are interested, links in description. You'll be able to see pretty much how to access the course, and any questions you have, just message me on Instagram. I'm always sort of replying to DMs when I've got time. So yeah. I think that's all okay. So let's just get straight into it. Now, with top-down analysis, let's look at this scenario. We've got Euro USD on the weekly chart. Now, if you were simply just a technical trader, this is the type of trade that you would have been taking. We've got equal highs accumulating at the top over here. So eventually we know that price is going to come back up there. However, we're looking at price over here. Bear in mind, guys, this is a weekly chart. So this is over the course of past 5-6 years. So of course, when you're doing this high time frame analysis, it's for you to understand what kind of area we're at and then how we can trade from that, really. Now, if you were just simply a technical trader, as I said, what have we got here? We've previously mitigated this order block right here. Eventually, price reached a premium area up here, eventually taken this equal high, but rather than taking the equal high, price simply mitigated off this order block over here and then continue to drop downwards. Now, what we can see right here is we're starting to create a range. Now, within ranges, you're trading between premium and discounted areas. So now, if we got to this price down here, what could we have expected to happen? If we were simply just technical traders, we would have been saying, okay, so this is a higher time frame discounted area, right? So we should only be looking for buys. It's quite protected because you've got this high time frame mitigation of this previous order block. And guys, if you are getting confused about mitigations and order blocks, I do have a bunch of videos that I've recorded in the past, all about order blocks and market structure and everything. So definitely have a look at them as well if you're quite new to this concept. But the question here is, why did this top-down analysis not even work in this time? So you've just got to think, if technical analysis is always going to work, why did this not work at all? And the main reason is fundamentals. Many traders do not actually understand the direction of the markets. Why did price move up so much higher up here? Why did price move down? It's not simply just because it mitigated this high time frame order block down here or up here. It's much more in depth than that. Now let's look at an example of what we've seen in the past 2 years, especially. Now, this is a daily chart on DXY. So pretty much just the opposite of Euro USD. We're looking at DXY, started from 2020. So as you know, of course, we had the pandemic happen back in 2020. This was pretty much the start of it all. Now, during that time, what tends to happen is you want to have an expansionary monetary policy, or also known as a loose monetary policy. The reason is because during a crisis, what usually happens is businesses, they tend to freeze up and everything. So there's less economic stimulation throughout the economy. And what you want to do, or what the Fed wants to do, is they want to create a bit more stimulation. They want, more economic activity within the whole country, or even globally, of course, as well. So what they tend to do is they tend to implement loosening monetary policies. So that includes things like dropping interest rates, close to 0% sometimes. Of course, that creates a bit more incentive for businesses and customers and everything to take out more loans in the economy. That's just sort of a smaller example of the whole economic cycle. Definitely search that up on YouTube as well to see it more in depth. But yeah, that's exactly what we started to see at the start of 2020. Now, if you know that we're entering a loose monetary policy, what does that mean? That tends to mean that as we have lower interest rates and also as asset purchases increases, sort of the flow of money throughout the economy increases as well. Now, with that, the amount of money that we have in the economy, the amount of capital obviously increases as well. Over time, that base currency actually starts to devalue. So as you can see from here, from 2020, the currency DXY or US dollar actually started to devalue because of these loose monetary policies. Now, it's exactly at this time, during 2021, around summertime, even starting from February, that's where we started to see a change in all of this. And that's exactly when in June 2021, that's when we started to implement tighter monetary policies. And just to, explain how I actually journaled all of this, guys, I've had a free public Telegram group for quite a while. I started this last year, even before doing YouTube and everything. I had quite a small group on there. Now, obviously, it's growing. If you are interested in joining this, link is in the description. It's completely free. You guys can join up there. But yeah, I've been documenting it the whole entire way for what we've seen in the past year, throughout this Telegram, just understanding the whole market direction. How did I know from here that DXY, we were going to be seeing buys for the foreseeable future? It's exactly because of these reasons. In June 2021, there was an FOMC meeting where we had initial talks about, inflation and how to combat this. So what they were doing, what they were understanding the problems that were caused due to loose monetary policies. With loose monetary policies, there's so much money and capital in the market and in the economy that it's just going to lead to higher inflation, right? And this is a problem because, household goods and everything, they start to increase. It becomes a lot more difficult for the economy or the users of the economy to afford things. Of course, you don't want higher inflation than 2%. 2% is that benchmark that we're always aiming for. Now, as soon as this happened in June, they started to mention possible tapering plans. Then in September of 2021, so as you can see, June 2021 is exactly here. That's when they started to talk about all of this. And what did we start to see? Price started to break up. Now, as soon as we broke above this structure right here, we've got two things right here. We've got confirmation of technical analysis. We're having this breaker structure upwards. And then also fundamentally as well, we know we're having a shift in the market. And that's exactly what we start to see in Euro US dollar as well. It's exactly at this time, June 2021, that's when price started to completely drop. And as you can see, what's the effect of it? Now, continuing onwards as well, in September, more of them talks started to happen. We had more of a hawkish intent from the FOMC members. Of course, guys, have a read of all of this. I've documented everything before it's all happened, and it's not rocket science or anything. As soon as you understand fundamentals, you'll be able to understand sort of market direction completely. When linking this to top-down analysis is very key because, like I said, there's so many times where you look at your top-down analysis, even on the high timeframes, and you think, why was this not valid? Why did this not get respected? And it's because of these reasons here, really. Now, moving on forwards as well, in December, the Fed actually were implementing tapering plans. So that what that means is a reduction in asset purchases. These are all terms that is included in my fundamental course, completely breaking that down. But yeah, Since then, we've been seeing interest rate hikes throughout 2022. And it's exactly why the market has been completely running off. Exactly, Euro USD keep on dropping, and then DXY keep on rising. So exactly that. That's pretty much the whole reason. So now what I want to do is to get a bit more into the charts. When you're looking at Euro USD, for example, here's on the daily chart. As I've said, around June time of 2021, exactly this point right here, that's where we started to see drops. So as soon as you know that we're now entering a tighter monetary policy, that's when we want to be looking for buys within that base currency. Now, of course, one other question that you're probably going to be asking me is, okay, well, if all economies are having tighter monetary policies, how am I able to trade that if they're all increasing interest rates? Now, it's exactly that. You need to understand the differentials between the different central banks. You look at Euro, that hasn't been increasing interest rates at all. They've been keeping their rates very low, still expanding their economy, or trying to at least. Whereas the Fed has been doing the opposite, and that's exactly why we've been seeing Euro USD sells. Now, how do you use this to your advantage? You know the fundamental direction, and it's exactly this. Where I remember exactly at the time, many traders at that time. When was this? A few months ago. So even in March of 2022. I was seeing analysis on Instagram and everything. Many Euro USD traders were actually expecting to be buying up from here. But me personally, I was still looking for sells. And many technical traders, they're going to be saying to me, okay, why were you looking for sells when, technically we're going to be looking for buys? It's exactly for this reason. So when looking at the charts, what you want to be doing is this. So fundamental direction is looking for sells, right? You want to go down to the 4-hour. This is what I usually do. Oh, just get rid of this. So you want to go down to the 4-hour. Now, always in any type of analysis that you want to be doing, preferably whenever you're entering trades, you always want to be entering on the extreme areas. So when you're looking at a fib retracement, for example, when you're looking at fib retracements, now personally, I don't really use them as much just because, I understand where premium and discounted areas are. This is what you want to be looking for. So, in this video, I'm not even going to be getting into how to apply a fib or whatever. That's a whole video in and of itself. But just for now, let's take this example over here. Now, with premium areas especially, you want to be entering on any sells above the 61.8% fib retracement. So that's anywhere in this kind of area. Now, personally, what I was looking for in this area was I knew, okay, I want to be looking for sells. Now, on the 4-hour, I've identified this is the order block that I want to be entering on. So anywhere within this range, even looking at the daily as well, let's see how that looks. So yeah, you can see right here, this daily order block is exactly what you want to have been entering on. Now, unfortunately, price didn't actually even mitigate off that, but rather it just completely started to drop based off some aggressive news by the Fed. So, we started to see these massive drops. Now, eventually, if you do want to be entering on these trades, you look at the 4-hour structure. Okay, so we didn't manage to get into that trade right there. Let's go down to the 1-hour. More recently, especially when you're looking at the 1-hour, this is the way I would always be doing my top-down analysis. Looking at the 4-hour, looking at the 1-hour. This over here, for example, was a miss as well, just above these equal highs. And unfortunately as well, price continued to drop downwards. So how do we actually, still enter these trades? More of an intraday kind of perspective. That's exactly what we've been doing recently. I was looking through this trade actually with my group on the recent weekly call that we had. The direction is downwards. So where can we actually be looking for sells? Now, always what you want to be doing is this. You want to mark out a few potential points of interest on your weekly analysis. So every week on a Sunday or a Saturday, I always mark out my zones. So let's just say, for example, we were over here at this price point over here. We've got equal lows that we're going to be aiming for. We know that fundamentally, of course, we're looking for sells on the higher time frames as well. We know that, on the daily chart and the weekly, we've been selling off completely. Okay, so how do we actually enter? In these points of interest, what you want to be doing is you want to link up all of this to like even down to the 15-minute chart, going in them stages. So you always want to go get your understanding fundamentally on the daily and the weekly charts fundamentally. Then when it comes down to the 4-hour and the 1-hour chart, that's going to be your weekly analysis. So you're going to be marking out all of your points of interest. Then when it gets down all the way to possible entry points, I would be looking at something like the 15-minute chart, potentially at times, even with 5-minute sort of breaker structures or 1-minute breaker structures. And that's the exact plan that you want to be following. All of this, and eventually, what have you got to see? Just as a quick example of how to catch a quick sort of 1 to 5 trade, you've got this, we're looking at the 15-minute chart. You've got your Asian range that happened over here. You've got London fake move over here. And then what happened? New York session completely started to sell downwards, exactly within this point of interest right here. So for me personally, this would have been a perfect trade to be selling off. At the time, I was looking at at different charts. But yeah, pretty much all entries that I've had recently, just been sending it into the group. But yeah, it's that exact same logic that I used over here as well with GBP AUD. At the moment, there's obviously there's a slowdown in the economy from China that's affecting pretty much all the Asian markets. So what I was expecting was for AUD to actually get a bit weaker. So GBP AUD to start buying out. Now exactly marked out this 4-hour point of interest and then refining that down to a 15-minute point of interest right here. And this is exactly the entry that we took, as you can see, and then entering even on the 1-minute or on the 5-minute chart. So yeah, guys, I think that's pretty much it. This is one of the things that I've had messages about in the past. People asking, how do you actually do top-down analysis? And why doesn't it actually work sometimes? And, before I got into fundamentals myself and before I even started teaching it as well, this was one of the things that I struggled with was, as just a simply smart money concept trader. So yeah, guys, I hope that's helped out with any questions that you may have had. Definitely, implement the strategy. If you're trading on the lower time frames, I would say stick to the 15-minute, perhaps even the 5-minute as well. And then, if you're really looking for confirmation trades, it would be down to the 1-minute as well, having some kind of break structure. But yeah, guys, that's pretty much it for this video. Definitely, if you have any questions, reach out on Instagram. We've grown quite a lot recently. So yeah, I'm always trying to answer DMs at least. Yeah, all links in description for the whole trading course. Of course, a lot of what we've gone through today is part of the fundamental course. But yeah, all links in description. So yeah, guys, anyways, have a nice day and I'll see you all in the next video. Take care.